Good morning, Kerwin. How are you?
Doing well.
Retiring to the stock market session 3, part 2 with Kerwin. Appreciate you. You asked me about puts and can we have like 50 contracts? So, of course, we teach. I have to teach both sides of the market, going long, going short. And if you're a money manager, or if you have that kind of money, you have to be able to play both sides. Also, you have to have a hedge to where you can't just lose. If you're wrong, for example, you don't have that. You don't have that luxury to lose like that. So you got to be able to play the puts when it goes down, calls when it goes up. Meanwhile, you're doing your positions, you're doing your stock, your share growth, you're doing your dividends, you're doing your trading. I say mild trading, and of course, we're going to talk about options today a little bit. And options, I mean leverage, right? I'm going to say most people are wrong about the market. The public is often wrong, which is to say that if you follow the herd, like kind of like the group of sheep or cattle, they're most always wrong. They're either too late or too early in what they think is going to happen, and they generally overestimate what's going to happen in the market as far as the news or the trend. So we're what you call contrarians. Write that down, contrarians. CONTRARIANS. Which is to say we go contrary to the public belief often, or at least we have some contrarian views, which could be opposite the public view. So keep that in mind. So because you hear something on TV, or you see, especially the news, Kerwin is filled with propaganda. Contrarian, we are opposite many public views. And write down here, news equals propaganda. Write that down. Meaning just like they just have like a machine of fabricated information to try to push the agenda this way or that way. But honestly, it's not going to help you. That's what it means. It's not designed to help you. They're trying to, either divide us or push us into fear, in fear mode, or if we should be in fear mode, they're going to try to make us feel safe. Okay. News is propaganda. So, of course, you got to be ready for a correction or a crash. At the same time, you don't want to just put everything into that because you could be wrong. Let's be real. I have a good friend who's very intelligent. He is a businessman, for example, successful businessman, but he's been telling me this market's going to crash for like 4 or 5 years now. And every time it's a new thing. Oh, I had to push it back because of this. I had to push it back because of that. He's like, God, like, get your money out. It's going to crash tomorrow. By tomorrow, it's going to crash. Something's going to happen. Brits, Trump, this, that, And if you read these books, if you're into the circle of information about the stock market, they've been telling us it's going to crash since the 70s. They've been telling us that. Right. So just be aware that the public's often wrong, but at the same time, you got to be ready. Okay. Now, you said 50 contracts or 60 contracts, right? Right. Do you remember when we talked about leverage? We talked about leverage last week, where the QQQs, for example, the stock was up 1.6%, but the option was up 52%. Right. You remember that? Oh yeah. Okay, so 50 contracts. You're talking about some major leverage. I wouldn't do more than 5% of my account normally. Right. But if you were gonna go, all in, I can maybe do 10% of the account. What to leverage puts, for example.
Right.
So if you're at 100K, you're talking about 5 to 10K in puts. So let's just go with 7%. I'm gonna do like a hypothetical portfolio. At 100K, 7% is 7K. Okay. So let's just say you have 10 positions, right?
Right.
Each position's 100K. Okay. So you can, let's say, close one position, or if you have a position of cash, you can put 7 positions to puts. Okay. I'm sorry, 7K to puts. Okay. Or if you have 10K, then $700 puts. Now we know that we can get a leverage put for like $1.70, right? So that's not too hard. As a matter of fact, can we do the Qs for now? Because I was doing the Qs on my own.
Okay.
Or do you need to do the spies or the DIA? We want to do.
We can do the Qs. I was looking at some contracts on the spot, but we can definitely do the Qs. I'm not opposed to that at all.
Let's do the Qs today only because the Qs are the top 100 NASDAQ stocks, right?
Right.
The spies are the top 500 stocks, and that's more diversified. So I want to do the top 100 stocks because most of them are techs, and it's more volatile. And I'm gonna tell you, when it does correct, it's gonna start with the Qs and the DIA, the diamonds, the Dow Jones are gonna be the last stocks to go because a lot of those are dividend stocks, like Coca-Cola, for example. And for whatever reason, Coca-Cola is gonna be the last one they're gonna sell because it's a staple, it's a dividend. But they're gonna sell Microsoft, they're gonna sell Apple, they're gonna sell, NVIDIA first, and that's the Qs. So let's look at QQQ. Bring up the 515 for June. Okay. Can you see me okay? Can you hear me okay?
Yeah, I'm going to it right now.
Now, we can go up to as much as 6 months, but if you think something's really going to happen, you can go 3 months. 3 months is my minimum. Don't tell me you bought a call option or a put option for next week. That's never. I mean,
no.
So even if we were to get like a correction, I swear, like it would be back up on top to a new high by the next week after that. So always give it at least 3 months on these call options or put options.
Yes.
So if you go June 515, why? Because the QQQs was it 436? Give me a quote on those.
On the 515?
No, give me a quote on the Qs, just the ETF stock price, and then give me the quote
stock
on the
stock price is 439.02.
439.02. Do you have down 6 from Friday?
Down 6 from Friday. We'll push 3, 4, 5, 6, which is 433.
No. Meaning the change on Friday. It is 439.
Yeah. How much it went? Yeah, it went down $6.43.
Okay, because why? Because that's kind of substantial. So it did start down on Friday. I mean, could be the start of something, but let's just be cautious, okay? So these are 439 down 6 on Friday, which is like what? 1.5%?
Yeah, roughly.
Now we're gonna look at the June. Now I just say 5 to 15s because I'm sorry, I messed up. I was giving you a call. Those are the calls. Sorry, we're gonna do the puts. So we look at like a 20% correction or a 30% correction, right? So like from the current price. So if we go down to like, let's say 320 or around there. We're looking for like $1 if we can. I think it's prudent to look for about $1. So
Yeah,
look at the
320.
320s.
Yeah,
Yeah,
the 320 is 109 on the ask. 315 is 101.
315, 109, 101. And what's the 310?
93.
93. So 10%, if it's 440, which it is, let's use 10% would be 400, 20% would be 360, 30% would be 320. Okay. So are you following me?
Yes.
So 320 is 109. So let's try this the 320 for 109. Okay. Now, if it's let's just do an ideal portfolio with 10K or what account size are you at?
What was that?
What account size are you at?
I'm sitting right around 20.
So if there's 109 and then we're doing 7%, that'd be like 14 contracts.
Right.
So that would be about $1,500.
Right.
Does that sound doable?
Yes.
This is a 14 contracts of the June 320s puts. 109, let's just say 110 because it'd probably get if you bought a Monday, okay. Now, don't just below 1,500 and buy puts and leave it there. I want to give you an income. Is that fair?
Yes, of course.
So because why? Because we got to make Morgan's money, Mr. Morgan's money, and I want to do it like a poor man's cover call. Okay.
Right.
But more importantly, we have the position. This is the position. It's a leveraged put. If you look, can you see? Are you able to pull up the option? What the option did on Friday? You may not be able to, but you might be able to. What that 320 option did on Friday? It may not be updated. If you have the actual position, you can press it. You can see what the change was on Friday, but that's okay. Not that important. I know that was up. Seeing that the market was down 1.5%. I know that put was up on Friday. It might have went from like 80 cents to $1.09, for example, which is like 30%.
Right.
Great. I mean, if it's 30%,
I can see that particular contract is up 9 cents for Friday.
Okay, so it's up 9 cents. So that's like 10%. Is that fair?
Right. Right.
So okay, so 10%. Okay, so let's say you do 14 contracts, right? 320s put. On the poor man's cover call, we sell the monthly spread. It's a in this case it's a debit spread because we have the puts, we have the 320 puts. We own that for 3 months. We're in April, May, and June. 3 months. And we can sell the monthly on that to bring in some kind of income. That way you're not just hoping that you're right.
Right.
You have the position, but you also bring in money. So what if we sold the I want to give you plenty of play, okay? Which is say that 10% of your account or 8% of your account, 7% of your account, it's going to give you a nice leverage. So let's look at the 290. Let's look at 290. Is there a 295 put for June?
Yeah.
I'm sorry, for April. Look at April.
295 for April.
Okay. Yeah, or we'll look at the 290 to 300, 295, right around there.
Okay, yeah, we're looking at 11 cents on the bid.
7 cents.
Yes,
Is that the 295?
yes, 11 cents on the bid on the 295.
How about the 300?
300 is 12.
How about the 305?
That is 14,
How about the 310?
15.
Okay, so but it's just like that's like if you look at it like the put is let's say 110. This is 15. That's like almost like 15%. Um, let's go with the 300. Okay, for now,
All right.
12 cents. If you said 12 cents on the bid,
Yes.
so that's $12. Okay, and 14 contracts is what? $12 times 14 is what?
What's that? 48. I figured out.
$12 times 14 is what? You have a calculator?
It looks like that's gonna be 168.
168. Now, what have we done? We own the put. We sell the lower put, bring in income. It's a poor man's cover call, PMCC, poor man's cover call. Bring in $168 or what? 10%, a little over 10% of your position. Okay.
Right.
Why? Because what's going to happen? Because in theory, we can bring in 30% return. So I'm not just going to put this $1,500 out there. Okay. 30% return is going to bring you about maybe $500 or close to it. $450, right?
Right.
In theory, because we're owning the put, we're selling the lower put. So we're long the put, we're short the lower put, bringing in money like a poor man's cover call. And this way you can bring in some money on that position. You're gonna have the full put up to 320. But when you hit the 300, okay, it's gonna be a wash because they're gonna cancel out.
Right.
You're gonna be short the market from the Qs all the way from the 440, which we are today, all the way basically to 300. So it's like 140 points. Now, yeah, so 140 points you're gonna be short the Qs, and the Qs I think will fall first if we have a correction.
Right.
That's out. So this is the spread, right down spread, right down 30% income over 3 months. Now, if the market starts going down, the income might be actually greater. Okay, the income actually might be greater because the options will be more. Okay,
Right.
but if the market kind of stays the same or goes up, we're gonna have to readjust. Write it down. If market stays here or goes up, we readjust upwards. Yeah. Why? Because these puts are going to start being less valuable and eventually worthless as we go
Right.
toward the expiration or as we go away from the strike, right? So
Right.
obviously, like these puts that are $1.09. If this market keeps going up, it comes back, and if everyone goes bonkers, let's just look at the opposite side. These puts are going to be like 10 cents.
Yeah. Right.
So if it goes the wrong way on us, if we're wrong in this sense, would have to raise that strike maybe like to 350, 360, 380. You see what I'm saying?
Right. Gotcha.
But anyway, but as it stands, we have a decent sized position, 14 puts, and we're going to sell the spread, bringing in like around 30% income. How's that sound?
Sounds great.
Why? Because you know, you gotta make Mr. Morgan's money, and you need to be able to earn your company car, your bonus, and that Black American Centurion card, that
Right.
Black American Express card. Now, did you do any cover calls with Palantir?
I did not, no. That was
Now,
another thing I do want to get with you on. So when we get a chance.
now, it's one thing to work out these positions
Yeah.
on paper,
Yeah.
these spreads, but if you never do it, you know, it's like water under the bridge, you know. Now I know
Yeah.
Palantir, I think it went up, then it went down. Did it go up from
Yeah.
last week?
Yes.
On the whole, it was up or what?
Yes. I don't know how much though. Let me look real quick.
Now, is there a reason why you didn't do the cover call? I'm wondering because to see where you are, you know, there's no point in me advising if you're
Oh
not
no,
really doing the trades.
I definitely want to learn that.
So you
I
haven't
think
you
I want.
haven't you haven't
Go
done a
ahead.
cover call yet ever, have you?
No, I haven't. And that's where I got stuck because
Are you
I was looking because on there I was looking for it to say covered call and it doesn't say that on there on mine's anyway that I seen. So when I go
okay?
to sell the cover call, what do you go to?
Okay, let me stop you right there. Um,
Okay.
don't do anything they tell you to do, okay?
Okay.
Because they have a trade which is a covered call trade,
Uh-huh.
and if you do 400 contracts, they're going to buy 400 more shares and then write the cover call at the same time, which is not what you want to do.
Okay.
Which all you have to do is, you know how we said you're going to buy the 320 puts times 14
Right.
first, manually do that, and then sell or write, which is a minus. The first one's a plus 14 contracts of the
Mm-hmm.
320 put for June, and then sell 14 contracts of the 300 for June for 12 cents limit, right? Oh, by the way, if it's 12 to 14 cents, you can always put like limit 13 cents right in the middle. You hear me?
Right. Oh yeah, I'm
Because that
listening.
way you've done that where you can save some money, make some more money.
Right.
So you can use limit order on that. Now, however, if the market is moving, right? Let's say it's when against you going down, for example, you're trying to get more money, and then you put a limit, then you miss it, put a limit, then you miss it. It keeps going away from you. If that's the case, before your trade runs away from you, just put the market because you don't want to miss a big move, right?
Right.
Okay, now back on your cover call. Get some stage fright, not sure what to do. Okay. You have the Palantir shares, 700, you said, okay?
Mm-hmm.
You're going to put sell or write, but it'll say sell on your account. Let's say
Right.
four contracts. It'll start you at 10. When
Right.
you just click, you're gonna click what's Palantir at? Put Palantir up.
Right now, they closed Friday at 2604.
2604. Okay, let's say we sell at 28. That gives you plenty of play. But if you really think that it's coming down, Kerwin, you can sell at 27. I don't like you to sell at 27 because it's like so close, you're not getting enough upside. But you get more premium. But let me tell you, okay, but let me do this first. Let's look at the 28. How much does it pay you for April? So we're in March. Look at April. What does the 28 call option pay you for April?
The bid and ask is 121 and 122.
21 to 122. Let's say 121. Okay. Now can we divide 121, divide that by 2604, which is the stock price. What do you get? 1.21 divided by 2404.
You got 4.5.
4.5% return for 1 month or for 5 weeks. That's excellent.
Right.
Most stocks will not give you that. Matter of fact, that's a diamond in the rough. And Mr. Morgan's gonna be very happy on that. However, let's look at also the 27, because, you know, if you think maybe this is gonna correct, we're gonna, in a sense, we're gonna get more premium. We're gonna cap ourselves, instead of capping ourselves at 28, which is 2 points of share growth. We can get 1 point of share growth. And how much we're gonna get on the 27?
That's 1.55. So 155.
So divide 1.55, divide that by 2604. What percent is that?
That is
1.55 divided by 2604.
How that can't be right? Is that also 4.5? Wait a minute. Let me do it again.
You may have done the first one wrong.
Maybe so.
That's okay. We'll do it all right now.
Yeah. Yeah, it shows to be 4.6 on that one. Let me go back and do that.
6%. Okay, do 121 divided by 2604.
Well, that shows to be 4.6% too.
Your calculator, you know, it might be your calculator doesn't have the right.
I got it now. Okay. All right. The 155 divided by 2604 is 5.95. So basically around 6%.
5.9.
Yes.
So the first one was correct.
Yes.
Was it 4.6 or 4.5?
4.5, I believe.
That's okay.
Yeah.
Okay, so
4.5. Yeah.
So if you can get 5.9% or actually 6% return in 5 weeks, Kerwin, you can retire in the stock market. You can get this kind of return because times 10 is like 60% return. Okay.
Right.
You can do 10 or 12 of these, or maybe at least 10 in a year. Now, let me tell you what the millionaires do. Can I tell you? The millionaires, they say, you know what? I got this PLTR. I wanna protect it. I want to get some decent money, but I want to protect it. Okay. What if I sell? What if I write the 23? Let's say I think the market will correct 10%. 26 minus 10% is 2.6. Let's say 3 points. I'm gonna write the 23 cover call. Okay. Watch this. Give me a quote on the 23, the bid on the 23 cover call.
That's 375.
375. Now watch this, okay? We have the PLTR at 26. We're gonna sell it. We're gonna agree to sell it at 23, okay, by April.
Right.
So we're already taking the 3 point cut on the share growth, but we're getting the $3 back of the premium and 75 cents more. Okay, why? Because we think maybe the market will correct, and we want to protect our shares at 23. So technically, the shares at 26, we're going to get paid $3.75, and we're going to sell them at 23. So we're still protecting our shares. If they fall all the way to 23, Kerwin, actually because of the 75 cents, they fall all the way to 22.25. We don't lose any money. We can't lose.
Right.
You understand? So we're getting $3.75 for doing so. So the break even is actually 22.04. I'm sorry, 22.27. Do you understand how we did 22.29? Do you understand how we did that? Because the price is 26.04.
Right.
minus 375. You see, that's where I'm going.
Okay.
So if Palantir was to dump from 26 to 2209, we're good. We don't lose
Right.
any money. You see, so that's how millionaires do it. They protect themselves from a correction. They still get money. Do write 75 cents, right? 0.75. Figure this out. Divided by 2604. Tell me the return on that.
You say 0.75?
It's 0.75 divided by 26.04.
That's 0.02%. 0.75 divided by 2604, right?
Yeah, 2%.
Yeah, that's
We still get a 2% return. Okay, we're protecting ourselves. If the stock dumps to 22.29, we're still at a wash. That's a hedge. That's like insurance. Follow me?
right. Right.
But I don't want you to do that. Back to your question, we're going to see on my phone app. All I do is you have like the strikes in the middle. You have you have the on this side, which is the calls, left side calls, right side puts. You just touch the actual strike, not the strike, but the bid. You touch the bid on the call.
Right.
If you touched, in this case, we're talking about the 27 and 28. You touch that 121 or the 155 like this, it'll say -1, and then it'll go to -10 because they set you up with 10 contracts initially.
Right. Right.
In this case, you want to do, let's say, you want to do 4, which is half. We're talking about doing half, but you can do more of that. Why? Because on the 28th, you're going to bring in 121 times 4 is $484 income.
Right. Right.
See, I'm teaching you how to bring in income so you can pay your bills. Okay.
Right.
Initially, they're going to deposit $484 in your account, which is going to raise your cash buying power by about $500. But you're gonna have a minus on your account or a negative, which is that option is going to be a negative. So you're gonna have a -1, or in this case, -4. April 28 PLTR, and that's going to show -1. Let's say 21 times 4. So it'll be a minus in your account, minus $484 because you're short that. But that amount will decay by April, the third week. Follow me? And as it decays, the money slowly goes into your account as a positive, and then you have the full amount by the time of expiration. Does that make sense?
Yes.
But if the stock goes beyond 27 and 28, you're just capped out. You can't get more money because you agree to sell at that strike price. So the stock will sell, let's say it goes to 29, right? Stock will sell at 28. You'll get cashed out. They'll give you 400 shares times 28. You have the money in your account. You can do what? You can buy it back, or you can put the money into another stock. Starbucks, Apple. Apple was up Friday. You see Apple was up Friday?
Yes.
But that surprised you.
And I was happy to see it, actually.
It went down more. It went down more, then it started coming back up.
Right.
Questions?
I do have a question. Kind of.
Before you go on, there's another thing you can do. Call your broker. See, the cool thing about TD, which is now Schwab, the best thing is they have 24/7 customer service.
Right.
So you call your broker and say, listen, walk me through doing 4 cover calls on Palantir. That's all you tell them. They're gonna do it for you. They're gonna do it for you. Minus you know, press a button, or they're gonna just do it for you over the phone.
Okay. So
You might have to tell them. You might have to tell them. Don't charge. They might have to charge a little commission for walking you through it, but you can just say, "Hey, can you waive the commission this one time because I'm learning," or just let them pay the commission. I don't care. The point is there's a man there to help you, walk you through it, hold your hand.
right.
And
Okay.
the last thing I'm gonna say is you can also call me. I'll walk you through it. I'll walk you through it on the phone. Just call me. I'm
Right.
usually available. So how can you beat that offer, huh?
Right. That's pretty good. Yeah.
Now,
So yeah, because I did go to do it, and when I seen that, I was trying to figure out. I didn't want to screw it up, so I held off. Honestly,
one time,
that's what happened.
I was trying to write 10 calls. I wrote 100 calls.
Oh, yeah.
I was like, oh, and then the market started moving. I was like, holy shit! I wrote
Oh
100
man.
calls.
Yeah. Yeah. Thursday I was doing my weekly uh deposit to my account, and I accidentally took money out of my account back into my bank account. So I had to put the money back plus the money I was going to deposit in there. So I get it. It was a mistake.
Yeah. So try to do those trades this week. But you know what? If ultimately you're not comfortable, you can always wait.
Right.
But I guess what I'm saying is, if we did all the work right here, and you're learning, you gotta, get your feet wet. You gotta jump in the water at some point. And
Right.
if you didn't do that, if the market does correct, or if pound, we're going month to month, the pound, you're not getting money on pounds here. Yeah, what are we doing?
Right.
I like to say, do 10 good calls a year, cover calls, and that gives you some flexibility where maybe the stock is down. We'll wait till it comes back up before we do the call. Or if we're doing 6 weeks, 7 weeks, 5 weeks, not exactly a month. So you want to have plenty of time to do your 10 color calls. And if you're doing 4% or 5% return, that's 40 or 50% return income. And that's all you need, Kerwin, to retire in the stock market. That's all you need. You need nothing else. So, but you got to start doing it. And you have to, get your feet wet, get the experience. And maybe
Right.
once you get it, man, you'll be like, no one will stop you.
Okay. Yeah. That was the only thing. I just didn't want to screw it up, so I held on. Yeah. And I actually bought a couple call contracts on it and just held off and waited. So,
Just press the one. You just trade on your phone, right?
yes.
Just press the 121 and it'll get you -1. And then
Right.
move it then click it to 4, put market, send it. And option 2, call your broker, walk you through it. Option 3, call me.
Right.
You
Okay.
can't beat that.
All right. I got
I
you.
want to say one. I want to say one thing. We covered the millionaires writing in them. So what I showed you is a deep in the money cover call. Okay.
Right.
Like look at this. Look at it this way. Like these millionaires have the money. They want to protect the money, right? What if I wrote a 20 in the money, 20 cover compounds here? It can go down 6 points. I'm good.
Right.
I got $6 a premium. And plus, it's going to be more than that because there's going to be a premium on top of that.
Right.
If it goes down to 20, I'm good. You see how that works?
Right.
So it's like you get to the point where you can't really lose money, you know?
Right.
And then it goes down below 20, then we're screwed.
Right. Yeah.
but
Right.
but but you see how you have more choices with these different trades.
Right.
The public's here holding pounds here, hoping it's going to go up to the moon. And then
Right.
if it goes down 2 or 3 points, they freak out, because oh no, my account's going down. I'm not going to be able to retire. Meanwhile, people like in the higher echelon are doing cover calls, bringing in money behind closed doors.
Right.
Let me offer one more thing. On these cover calls, if you can get 5% during a month, how many cover calls do you have to do So you get all your investment back. If you're getting 5% a month, how many cover calls do you have to do to get 100%?
What's that, about 20?
20. So on theory, on paper, Kerwin, 20 months, which is like within 2 years, you can have your whole investment back, or in this case for PLTR, 26 points of income on PLTR, which is 100% return within 2 years. Write that down. 100% return, 5% a month is 100% return in 2 years. Write that down. What am I getting at? 5% return within 2 years is 100% return, and that is called cash. Did you get to what's called a cash cow? Cash cow. CASHCOW. Why? Because after 2 years of cover calls, if you think about this income you're getting, you've already paid for the stock, okay?
Right.
And then you continue with the cover calls in year 3. You keep getting 5% return, 5% return. You get to the point where you can't really lose money. If in theory, if you practice this, and let's say you put money aside in one account, or you withdrew the money, 26 points, 100%, and then you continue to do cover calls because your money keeps coming in, right? You have what's called a cash cow, which is to say that the cow is paid for and it just keeps giving you money. Sit on that milk.
Right.
And in theory, if you can get this right in your head, you get to the point where you can't lose money. Okay.
Right.
I did 77 cover calls on Twitter.
Really?
And that I was well into the cash cow before Elon Musk bought the company.
Right.
So I was to the point where I couldn't lose money on paper.
Right.
My account could go down. Really, I spent the money, but because I'm paying my bills. But the account can go down. But if you've already churned all this money from this investment, in theory, you can't lose on paper because you've already gotten the money. Now, what the truth about it is, when you're doing these cover calls or spread or poor man's cover call, you're doing this Q position, the pound share position, the stock is moving. So here's the challenge, it's going down. Let's say it goes down to 26, 25, 24, 23. We're still doing the cover calls down. Then it goes back up to 24, 25, 26, 27. We're still doing a cover call. So we have to roll with these punches. We have to roll with this roller coaster.
Right.
Even if the stock is going down, you still have to do the cover call and have to do it on a lower strike because that brings the income. Okay. Think of it like I got to do 10 cover calls this year. That's what I bring in my 50% or 40% income. If you bought the shares at 26 and it goes down to 25, 24, 23, 22, you still have to write the lower cover call, which is going to give you a loss on paper as far as the share growth, because you buy 26, then you're going to do the cover call for 25, 24, 23 as it goes down. Technically, on paper, you're losing on the share growth if it gets taken out. Because you can buy it for 26, you sell for 24. The next strike is 23. Next strike. But what happens is you're adding up all this income, 121 here, 155 here. And at the end of the year, if you got 121 times 10, that's 12 points. You got 155 times 10, that's 15 points. You see? So don't worry about losing 2 points of share growth or 3 points of share growth, because you're going to get 15 points after 10 cover calls at the end of the year. And after 2 years, you're going to be in a cash cow. But if you don't write the cover call, there's no income and you can't do any of that.
Right.
I coin that phrase, cash cow. You like that?
Yes, I do. I absolutely do.
Questions?
So I'll tell you what I was thinking. I was thinking that it was something I go to, pull up the sell order and then pull up the 100 shares or whatever, you know what I mean? So I'm just going and selling that strike, and it's automatically covered by that. I'm just trying to make sure I'm okay. Gotcha.
automatically covered.
All right.
You can send me the picture of the trade to make sure you did it right after you do it.
Okay.
Okay.
I'll probably just do 100 shares the first time. I mean, yeah, one contract the first time just to make sure everything is, and then we'll go from there. Then I'll go from there
Also,
with
you know how the trade will not end until the expiration. So
right.
it's gonna be there like showing a negative, but look at your cash. Look at your available cash.
Mm-hmm.
Look at your available cash before the trade and after the trade, because they will deposit that cash in your account. You'll have more money for what? Buy more shares, pay your bills. You'll see it. You'll see it change on your balance sheet when you click on your app. You'll see the available cash. The net liquid won't change because you're technically at a negative until the expiration, but the
Right.
cash available will go up. You follow me?
Right. Gotcha.
Okay, that's just a confirmation that you did the right trade.
Okay. Good to know. Now, another question. Roku. Now I was looking at that higher time frames, and with Roku being down so much, I didn't realize that it was almost $500 in the past. Until I really started looking at it, and man, it's just been basically coming down since then. So, can we really expect for it to buy back up, say to 120 or so? Or what's your thoughts on that?
I think so. If you look at the 6-month chart,
Mm-hmm.
6-month chart, it's still going up. It's going like this.
Right.
So it's still on track. The 6-month chart, it was like 51 at the low.
Right.
So we're okay.
Okay. I just
We can
wondering.
still do the spread. We can still buy the call, sell the higher call, do the spread. I don't remember the trade we did on paper with you, but it's a similar trade. Do you
Right.
remember? Do you remember?
Yes.
What was the trade we were doing?
Let me go back. I can turn the page. It was the sell the 120 for June.
Right, aren't we buying calls?
Yeah, basically on the spread that I have. I mean, on the contract that I have now.
Right, which is what?
Uh, the one I have now was the April 100. Yeah, that's it. The April 100, and remember I talked to you about rolling it out to June, and you used to do like you buy the June 100, you sell the 120, and you create that
Yes.
spread. Right.
Yes. You buy the 100 call, sell the
Right.
120. And
Right.
I would do that soon because in 5 weeks this position is gone.
Right.
I would just close it when I can get, let's say on Monday, close it,
Mm-hmm.
open it up for June. If you need to put more money into it, or if you need to do a smaller position, that's fine.
Right.
You
Right.
just sell shares, sell 100-pound shares to get it going. That's fine. I do think it will pan out. And June gets you 3 more months, and that's the same thing we did with the QQQ put. We bought one and sold the other one. With the put, you're buying the 320 and selling the 300. But with the
Right.
calls, you're buying the 100 and selling the 120. See how it's the opposite way?
Right. Yes.
But both positions you're bringing in money. You're buying one and selling the other one, so you're bringing back money.
Right.
I think we
Right.
were I think we were getting a third, 33% back on the Roku, which is a one
Right.
time. But on the puts, we're getting a 12%, 15% return every month on the PMCC, Plumets Cover Call. So a little different strategy, but they both work.
Right. which is what matters.
Yeah. Questions. Did you know this penalty went up on Friday?
What's that?
Did you know this penalty went up on Friday?
Yes. Well, no, it went up. Well, then just about everything went up and then came back down Friday.
I got Palantir up. I'm sorry, not Palantir. Roku.
Roku, yes.
I got
Yes, I
Roku
did.
up 143 on Friday.
Yes. Yeah. And you know what I'm saying is a lot of calls being bought at 80 for the April expiration. So that's what I'm saying anyway. We'll see how that pans out. But of course I want to roll mine out, to make sure I get that time.
You don't want to wait till the last second, Kerwin. So it's going to be nothing left.
Right.
Even if you get 10 cents, that's better than nothing.
Right.
Yeah, so Roku. So you're looking at option activity in that. First of all, I appreciate that. You're doing your homework, but I want to tell you that I generally don't teach to do that, because even if you get people to buy and call, a lot of calls or a lot of puts, it's not going to be 100% to where you can predict the direction.
Oh, no question.
Because you can always get a bigger trader or more people that are going to do the opposite thing, and then your trade will go the wrong way.
Right.
However, I like Roku. I think it's going to go up. And in that case, we'll go long. We'll buy this 100 call. Let's say for June, we'll sell the 120 to bring in the money back. And we'll have plenty of play if the stock goes up. And if we correct, these QQQ puts will go up. Okay.
Right.
And you'll see that. We covered a lot. I don't want to do too much, but I want to hear from you now. Your thoughts now.
Yeah, I definitely learned a lot of that. I'm glad you brought up the cover calls, because I meant to ask you about that, but so I'm definitely gonna get into that this week. Write those cover calls. Get that. I might not close this position on Roku in April. I just open me another one in June and see what happens with the April one. I won't wait too long. Probably wait another week or so before I close it out. But
have you called your broker, which was TD but now Schwab, and talked to them over the phone?
No.
You can call them right now. You can call them 24/7.
Right. Okay.
You can call them right now and say, "Hey, listen, I want to set up 4 cover calls for Monday on Palantir." And you can put an order. You can put like what's called a limit order. It says 121 on the 28th.
Yes.
155 on the 27th. You can put that limit order right there. What I do is if I'm going to trade on the weekend, like Sunday. So tomorrow is Monday, right? Are you going to be working, by the way, tomorrow?
Yes.
Perfect. So you can't always look at the market when you're working. So call your broker right now to tell them I want to talk to a human person to walk me through doing a cover call on these positions. And let's say you're doing the 27, right? 155. Since it's Sunday and the market may move, if it says 155 limit, 155 bid, you can put 150 limit, because you're giving up 5 cents in case the market moves against you, but still 150 is great return. So you're going to get 150 or 155, or even if it goes in your favor, you can still get 160, because the market opens up higher. For example, that 150 limit could be 160. So it won't automatically give you the lower price. It just gives you the best price up to that point.
Right. Okay.
So you can call right now and you can set up an order, which is GTC, good till cancel order.
Right.
Because most orders are day orders, and then they expire at the end of the day. But then if you do a good till cancel order, the broker will have it'll last for, I think, 120 days. And that
Right.
way,
Okay.
orders are sitting there. It's going to sell the moment that your price hits. And in this case, if you give it 5 cents, it should hit immediately at the open.
Right.
You want to try that?
Yes. I might do
If you
that.
haven't
Yeah,
called your broker, you should call them and talk to them.
right. Now, you know, there's Charles Schwab actually has a massive campus, like 10 miles from me. So can you actually like go there and sit down and talk to someone? I'm sure you got to pay, but can you do that as a trader on their platform?
Yes, the idea. So let me talk about that. Okay, so the Schwab property, right?
Mm-hmm.
And inside they're stockbrokers, right?
Right.
Okay, so they do really 3 things there. They welcome new clients, and they'll sit down with you and talk to you, but that is generally geared towards them managing your money.
Gotcha.
And
Okay.
for that, you say no, because they can't do for you what I can do for you, which is to
Right.
teach you how to retire in the stock market. They're gonna do all these trades for you, and you're not gonna learn nothing. Okay.
Right. No, that's not what I want. I want to learn.
Uh,
So,
and when they manage your money, they take it. They take their cut. Believe me, they
oh,
get
I'm
paid.
sure they do. I'm sure they do. Probably
The second
big
thing
chunk of it.
that's the second thing that's for is to go there and you can deposit your checks, open your account, talk to someone in person, right?
Mm-hmm.
And the third thing is just to hang out, talk to other traders. If you notice, like they'll have like a little place to sit down. They have the market ticker going, the TV
Right.
going. So
Right.
they might even offer you coffee. So it has to do with creating that environment where you can kind of go hang out, look at the tickers, sit down in the chair, they have a newspaper there, they have a magazine there for you. It's all like when you go into, it's like when you go into a hotel, like the little area there, like to sit down, chill, to have water there, they have ice, they have coffee.
Right.
And they'll be if you notice, you walk into Schwab, they'll be very nice to you, very courteous,
Okay.
very high,
Right.
because they'll treat you like you're gold.
Right.
That you might notice. And when that happens, why? Because it's all about that money. It'd be like,
Right. Right.
Mr. Mr. Kerwin, how are you today? Would you like some ice water or coffee? Oh, you want some hot tea? Okay. Would you like
Right.
a sesame bun with that?
I,
Sir,
I would like I would
yes.
just like to go there one time and just kind of see how things go there. You know what I mean? I'm not trying to go there to actually learn trading from them, but I would like to see if they have traders there and just kind of watch them, see how they do. So
Okay, you said learn trade. They don't
no,
listen.
uh,
You won't see
uh,
them trade. Listen, you won't see them trade.
okay,
Okay.
okay,
What they will do though, they'll sign you up with a seminar.
oh,
Because
okay,
and they're going to try to sell you on a monthly tool, which is like cost you $100 a month. That they're going to give you these option tools, the stuff they're going to try to sell you.
right,
I don't like that because I don't like you paying for what I can teach you, what we can
right,
learn on our own.
yeah, right,
But I have a couple of customers or clients who buy these tools because they just like to have the bells and whistles. So I have there's tools that will get you like find you a 5% dividend or 5% cover call, different kind of tools. Um,
okay,
they'll have tools that will eliminate or find certain stocks in certain sectors for you. They'll different stuff, trading bots, just stuff that really you don't really need. I don't think
yeah, okay, yeah, no, no,
they
that's
won't.
that's not,
They won't trade. Okay, so the first layer of people you see, customer service brokers, those people actually don't trade. Those people are customer
right,
service people.
right,
The traders like to do stuff that we do or in the back
mm-hmm.
office, and they don't talk to anybody. They keep their
Right,
door shut. They just let them trade,
yeah,
get that
okay,
cover
I got
call, get that put action, get that call action,
you, right,
and they won't tell you. They won't teach you that. They won't teach you what I'm
right,
teaching.
right,
So it's just kind of like, um, but go and look and look around, get your if you can't coffee or tea and just sit down but when they tell you, can we manage your account? Tell them no. Do you want to go to any seminars? Not right now, but you can tell me about them. Don't buy any tools. You know, some of these seminars will have like $1,000 packages. Some of these seminars, so it could get expensive.
Oh yeah.
You'd be calling me up,
No,
be like, Godric, I'm going to sign up again with your individual course. The contract is $3,000.
right. Yeah. No, I definitely want to. I mean, because when I say, man, I mean, it's when I first passed by there, I thought it was actually like a university, like a college campus. It's that big. It's huge. So I was just wondering, you know
Go
what I
in there.
mean?
Go in there and talk to them.
Yeah.
There'll be
Okay.
a secretary that will take your checks. You want to deposit checks?
Right.
There's not that many checks nowadays. Everything is like wired, or
Right.
transferred, but they'll still take your checks. Also, they can write you a check. Like, let's say you want to have an official check written by them. You show them your ID, and they'll do a withdrawal from your account. You can take that check right to the bank. So you can put money, take money out, talk to brokers, look at the ticker, look at the TV. Ideally, you do it on a weekday because that way the market's going. You know.
Right. Oh yeah. No question.
Are you off any weekdays? Are you off any weekdays? Or you work every day?
I will work every day, just the weekend, which is the reason why I'm going to push my start time back to noon here, probably at April 1st, so I can at least have a couple of hours in the morning to kind of actually watch the market while the market is actually open. Normally I'm at work, you know what I mean? So
yes,
I'm trying to watch and work and work and watch, you know what I mean? Yeah, I miss a lot, you know what I mean? So I want to try to free some time up in the morning so I can actually sit back and watch the market for a couple of hours before I actually go to work. So, and then work my way out of there with the market. You know what I mean? So that's the goal.
we talked about getting $484 on Palantir for contracts. Talked about getting $168 on 14 contracts of these Qs. Talked about putting 5 to 10% in your account, but not more on puts, but also getting the income on that, not just with no income. We talked about deep in money cover call, Palantir from either 26 all the way down to 23 or 22 or even 20. This is good stuff too. To rewrite your notes, rewrite your journal between today and next week. I'm gonna send you the recording when I get it. Review the recording. Call your broker. Don't be afraid. Don't be a stranger to your broker. Call me, text me, walk you through it. Okay.
All right, we'll do.
We good? We
good. Yes, sir. I appreciate your time.
God bless you, Kerwin.
Thanks, sir. You too.
Take care.
All right.